Hey everyone, this is Ryan Mallory with SharePlanner.com doing another live Google Hangout with you guys here in the midst of a lot of market turmoil, determining direction where this market really wants to go. That's the hard thing in all of this. I mean, it is a tough market, and I've really been saying that now for a good solid year. You go back to December of last year, even then it was starting to get a little bit quirky on us. And then, of course, we had the drop in January, followed by the pop in February, consolidation from March all the way through the middle of August. I mean, just mind-numbing consolidation that just wouldn't show any kind of sign of where the market wanted to go. And then on late August, I think it was about August 18th. I can give you the date for sure here, but August 20th. My apologies. August 20th, we finally broke out of that range. We had about a 3-day drop that followed thereafter. And if you didn't get in on that drop, you really weren't able to profit much off of the sell-off because it was quick and fast. That was followed by a good month of just complete like a slow melt up that really didn't go anywhere per se. But ultimately, it did result in another drop that took place over about 7-8 days. So now where we're at in this market is there's a potential double bottom here. And for the most part, today has been an opportunity for the bears to try to erase the overnight gains that the S&P futures were sporting and try to drive this market lower. And for a good part of the day, it has succeeded in doing that. But now with about 2 hours left of trading, you can see here where the bulls are creeping up the price a little bit. We're not at break even yet, but it's getting very close. It's about 14 points off of the lows of the day. So that's a good sign there. So about 75% of the losses have been recovered by the market. So there's definitely some momentum building for the bulls here. And if they can sustain this, there's a good chance that tomorrow we're gonna have a good strong up day as well. So maybe not like yesterday, but you can see these market bounces when they happen, they're pretty strong. I mean, you go back to the one from late August, we essentially bounced from 1867 in 3 days all the way up to 1988. So 120-point move. Now, we haven't seen that kind of a move yet. We've seen about a 44-point move, or now a little bit higher than that if you count the highs of today. You count the highs today, it's been about a 57-point move. Not nearly to the extent of what we saw back in August, but the sell-off wasn't as great either. But we're going into the fourth quarter now. The second quarter and the third quarter were both net losses for the stock market. That's the first time we've seen that, I think, since 2011 when you had the significant sell-off back during that summer there. So now we have something that we haven't matched in about 4 years has taken place. But this fourth quarter, there's been something magical about the fourth quarter where the bulls really take off in the fourth quarter. It's the strongest quarter of the year. It goes along with the Christmas season. So I am not overly optimistic, and I could be wrong. I'm not willing to sell the farm on this, but I'm not optimistic that we're going to see a heavy sell-off between now and the end of the year. I think what we have here is a strong possibility of a double bottom, and this double bottom will create a great base for the bulls to launch from, and it'll be a pattern that people talk about for a long time that says, hey, remember when we sold off in August and then in September we created this perfect double bottom? It's like a double V-shaped bottom. We're used to the V-shaped bottoms in this post 2008 recession market. We're used to these V-shaped bottoms, and technically we would have two V-shaped bottoms in the form of a double bottom here. So the key for the bulls then is going to be getting priced back over 1997 and over the psychological 2000 barrier, and then 2059 is where the market would be break even for the year. So if it gets back to break even, that's a pretty significant move there to close the year out, and it's not impossible. Third years of presidential elections, they tend to be very bullish because Congress isn't enacting as many bills, but also you have the possibility of the Fed raising rates. But to counter that, the Fed has never raised rates in a year where the market has been down, or let me back that up. The Fed has never raised rates at a point where the market was down for the year. So the market is down in October. I wouldn't expect when they meet again, I wouldn't expect them to actually raise rates in October because historically speaking, they've never done that. So it would be a huge breach from what the norm of raising rates has been in the past. So you got that with the S&P 500. I'd like to see us get back above that 10-day moving average today. You got some volume that's trying to creep in on the SPY. You can see it's been slightly above average. It's not like what we saw back in the middle of September. So the volume is holding up a little bit better than what we had seen before. And then you got the Russell Index, which actually had one of its longest consecutive day sell-offs of 8 days in a row that hadn't been matched in like 8 years or so. So it bounced yesterday, but not really too much to impress us today. But you can see that the sell-off has been steep for the Russell as well. It's back to the bottom of this channel here that we were trading in. The Russell all of last year was trading in this large channel. And now you can see if you extend that box out even further, that the Russell is essentially testing support off of that bottom channel. So not a bad, if you really think about it, if you wanted to look at IWM, you could take a long position in IWM, put the stop loss below Tuesday's lows, and see if, you know, at 106.97 as a stop loss, if it can keep pushing higher from 108.55. So not a bad play there, considering how much support is there on the Russell for from a 2-year standpoint. That has been a very strong launching pad. You can see every time it's tested it, minus one time, and actually it went a little bit below it back in late 2014, but quickly recovered. This has been a good launching point for the Russell Index. So that's something that I want to keep an eye on as well going forward. And let's look at the NASDAQ here. I don't think that the NASDAQ chart looks very good at all. Some of the big name tech names have held up really well of late, but this particular case, the NASDAQ is just really struggling to hold on here. You don't have the clean double bottom like the S&P 500 had. This one shows more of the panic sell-off back on the 24th, as does QQQ. So this one here, I'm not really crazy about wanting to play any trades off of the QQQ. If you're going to do something, I've got SDS right now. Essentially, I'm looking for that thing to. I'm sorry, not SDS, SSO. I'm looking for SSO to pop a little bit higher for me in the days that come off of that double bottom that we had talked about. Let's go ahead and look at some trade setups too now. You got NFLX. This one's got a lot of appeal to me, guys. It's a bit of a sloppy chart, but NFLX is a high flying stock. I mean, this thing can move mountains in a hurry. But you got some resistance here that it needs to break through, and it's been struggling with over the past month or so. On 2 separate occasions, it's been rejected at this level. So in the coming days, if it can break above 105, that's definitely a possible trade scenario there. But the stop loss is going to be difficult. And the reason why I say that is I like to keep my stop losses under 4% usually, because that allows me to have a more favorable risk reward on my winning trades. And going beyond 4%, I find that my trade returns aren't usually that great. So I know what I'm good at and what I can do well with the market at. So I try to keep it under 4%. Netflix, I like to see this thing get above 105.35, 105.40. But in doing so, finding that ideal stop loss is going to be a little bit of a challenge, but not impossible. Chevron, I highlighted this on my watch list last night, but worth noting again because the chart is probably going to be a little bit different after today's action. So if I'm going to redraw this chart, I'm going to redraw it like that because I think it gives us a clear breakout level now going forward. So I would say that if it can get back above 80 tomorrow, it would be worth a buy, but not today, obviously. It needs to break out in a more convincing fashion. But another solid trade setup that, like Netflix, there's going to be a little bit of a difficulty finding that right stop loss, but tomorrow's price action might be able to clear that up a little bit for us. MRO, there's a few oil names out there that are really shaping up nicely. MRO, it's another one similar to the Chevron setup. I don't like it as much as the Chevron setup, but it's one worth following. You got a bit of a downtrend here that is trying to break. It's actually a triangle when you draw the bottom line here. And if it can break up out of that triangle, that would be great. Otherwise, if it breaks down below the triangle, it's a continuation triangle. That will mean more downsides to come in this oil name. PXO, this thing rocks, man. It really hasn't been overly affected by the sell-off in oil over the past year, namely because it's a refinery and not. But in any case, it's held really good. It's got some support there, a 200-day moving average, some additional support off of that $96 level, which it is bouncing off of. So if this thing can keep its momentum going, I don't see why it couldn't hit 105 to 110 here in the coming weeks. And then finally, you got MSFT. This is a breakout that's not going to be for today. But if you can get this thing back over 44.75, you got what I would call an ascending triangle pattern. And I'll draw it here for you. You can excuse all the other lines because there's plenty of them on this chart. I'll just steal this one from over here. Let's see if I can get this line straight for us here. There we go. So you got a pretty good clear breakout level that you can get long on. So if it gets, I would say wait for it to clear the 50 and the 200-day moving average because those are pretty significant there. But it gets above like 44.80. I think you can play this stock, and then you could put a stop loss under 43.50-ish. A couple of the big names worth looking at, not necessarily saying there's a trade set up there. Apple continues to get hammered, though it's trying to make a little bit of a comeback here this afternoon with a little mini cup and handle pattern on the 5-minute chart. This one really needs to recover if the market's going to go anywhere in the coming days. You still have the huge sell-off in oil, really looking fabulous today. And then it just gave up all the gains. I mean, just got hammered. And key support here is going to be this 14.25 level for USO. Break that, and there is the possibility that we start seeing some retests of the previous lows here. So the bulls are going to want to make sure that they hold on to that 14.25 level. And you can see in the recent past where we get similar kinds of sell-offs here, and then again here, where the bulls quickly try to buy it up the next day. So it'll be interesting to see if that happens tomorrow. All right, and let's look at two more charts, Google and Tesla. Google, just a total mess, quite honestly. There's no rhyme, there's no reason. If anything, it's more bearish than it is bullish. I'd stay away from trading Google right now. I really don't see any price patterns in it, except for the only thing I see in it, honestly, is new higher lows, lower highs. I'm sorry, new lower highs, 1, 2, and 3. So there's no momentum to the upside. To the short side, it just looks really sloppy. And then Tesla, they just came out with the Model X, really cool looking car, but not getting back above this critical support level here that I deem at around the 253, 254 mark. Went up there momentarily, couldn't establish anything back up here towards the recent highs, and has started to sell off again. So I'd stay away from Tesla as well. Some of these big names just aren't looking too hot. And what the heck, I'll throw in one more chart here. Facebook. Some people are wanting to be buyers here because there's a lot of people that are still holding firm to the belief this thing is going to test 100 by the end of the year. It very well may. I just don't see a really good edge on this trade right now. It's been getting hammered after that 9 or 10 day run up that it had back in September. Now it's given up a lot, if not all of those gains, and it looks a little bit troubled. So I don't discount the fact that it can go back up to 100. I just don't see a trading advantage there at all, and there is some resistance overhead to be weary of at around the 92.60 mark. So those are some price levels to be guarded about here in the coming days. So that's going to be it for today. If you guys have any questions, feel free to email me, ryan@shareplanner.com. I am in the splash zone every day, trading with other like-minded traders, and teaching and helping, and just everyone working together to find the best trading opportunities to profit from, whether it be long or short. We're sure to be somewhere in the mix of all of it. And if you have any questions, once again, just go ahead and email me, or sign up for a free 7-day trial to the SharePlanner Splash Zone. You can try that out, shareplanner.com/splash zone. And there you'll get all my real-time swing trade alerts via text, email. We send those alerts out to folks internationally as well. So y'all take care and have a great day.